So if you're still struggling to figure out what point of interest is actually going to hold up in the market and you keep failing time after time after time, in this video, I'm going to be showing you the exact two-step process that I use now to determine whether that point of interest is either going to hold up or is going to fail miserably. Now, I used to be in your position where I would mark out the charts, I'd mark out many points of interest, whether it's order blocks, fair value gap, support and resistance, whatever you name it. I used to wait for these zones and for some reason they just wouldn't hold up. So once I started to implement this little two-step simple strategy, I started to realize just how successful these little entry points can be. From that point onwards, you'll be able to comfortably go on to actually get your entry models and then finally look at your final confirmation. So without further ado, let's get straight into this. As you know, I'm a very visual learner and I think a lot of you guys are as well. So I'm always using my cheeky little iPad over here to try and explain it as best as possible. Now, let's just do a brief recap on to what you're possibly doing and what I know for sure I was doing back in the day that just was not working for me. So as you know, whenever you're trending, you are going to get certain points of interest. Now, the main objective behind a continuation trade is as simple as this. You simply have a high, a low, a high, a low, a high. From that point, you can actually identify the trend if this is a higher high, a higher low, higher high, and a higher low again. With every single pullback, that is when you're going to be waiting for a particular point of interest, and from that point we'll actually be able to move in the direction of the trend. Now the problem with this is on the higher time frame, it looks very simple, and even in theory it looks very simple, but the problem behind it is that in between this section, you've actually got multiple points of interest that you could actually rely on. So this little impulsive move over here, what it actually looks like is we've got the order block area right at the bottom. Then we've got a fair value gap just over here. Then we've got another order block area just above. And then finally, as price continues upwards, we might even have, let's just say, some other order block that pops up over here, as you know, fair value gap in between, and that is now the high. So we've now identified that this is the high over here, this is the recent low. So pretty much what we expect is, number one, we expect a pullback in at least 61.8% retracement. So what that eventually does is it marks out, or it crosses out, a lot of the potential entries that we might get before. If you stick to this, you are definitely going to be trading within that discounted zone, and you are looking for them higher probability setups. Now, even though we've refined it to just this 61.8% retracement or even further, there's still multiple points of interest that we could enter. I'm going to identify the first one is going to be this order block zone 1. Then we have got the fair value gap 1 there as well. And then we've also got the order block 2. Another extra layer that we've got on top is potentially this low over here. So what we've identified is we've actually got 4 potential points of interest that you might possibly enter on. Now, the most premium or the most discounted areas are obviously going to be closer towards this 100% retracement. At the 100% retracement, we've obviously got the low. We've then got the most extreme order block. Then we've got the fair value gap. Then we've got the order block 1 pretty much at this 61.8% retracement. So the question lies, what do we actually use? Now this comes down to a few simple things. You're going to have to wait for a little bit of confirmation. So rather than simply just waiting for a pullback where price goes like this, and then eventually you've got some sort of entry limit right there, take profit, let's say it's at the high, that's what you're going to be waiting on. Now, unless you're a higher time frame trader, typically this is something that you're not going to be looking forward to. You want to be definitely confirming on the lower time frame. So first of all, you could trade in certain sessions. You can actually not have to stay on the charts all day long. And then also you get higher confirmation trades, because at the end of the day, an entry limit is always going to be a level below a confirmation entry, simply because you are waiting there and you are actually seeing how does price interact around these areas. Now there's going to be 2 types of interactions that you can actually have. The first one is, let's just say this is our zone over here. And then the second one, if we say this is our zone over here as well, exactly in the same spot, you are generally going to get 2 types of interactions. Either you get, as price goes towards it, it simply just rejects off and then starts to move downwards. that is typically the type of reaction, and that is what we're going to call type 1. Type 2, however, is going to be where what price actually does is it gets very, very close to price action. It gets very, very close to the point of interest. And then eventually, rather than actually respecting this order block zone over here, instead what it does is the final rejection candle continues to go upwards. It sweeps the liquidity just above, and then it decides to reverse. Now, the most important thing with this actual entry model is the fact that you must have this wick candle over here. So the body closure must close below the actual high, and then the wick must continue upwards. Technically, what this is showing you is that price does not want to close above, because there's a very, very key difference that you can have. A successful type 2 is going to look where, let's just say that is liquidity, we actually close below. A unsuccessful type 2 is going to look something like this. And then eventually, let's say it closes below. The difference between all of this is that price has actually swept this liquidity. And the difference between here is that the candle has actually closed above. So what the market is showing you is that it's got clear intent that it wants to continue upwards. If you ever see something like this scenario over here, what you may potentially see soon in the next few candles is price. Yes, it might move down for a little short while, but eventually it will still come back to take this area. Now, we are looking at a type 1 where it rejects off here, and a type 2 where it actually rejects off the liquidity sweep up above. A unsuccessful point of interest interaction is going to be where price simply just moves further, and then eventually price just continues in that same direction. At that point, you're most likely getting some sort of change of character. So very clear, we've got entry type 1 where we reject off it, and then entry type 2 where we actually reject off the liquidity sweep. So very, very simple. And so now getting straight into the chart, I'm going to be showing you some live examples of recent price action. So there's no BSing around here, and we're not trying to fake anything at all. In terms of recent price action, just seeing Euro USD, what we can identify is that we've actually been on this higher time frame move upwards for the longest while. Finally, it's come to a point where it seems like price is actually starting to slow down. So what can we actually take from this entire thing? Well, let's actually clear up our charts initially. As we know, where we are starting to move to the upside, it's very clear that all we're looking at is higher highs. So let's actually identify this. So we've got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then this continues up and up and up until we obviously get some sort of change of character that completely reverses market structure. Now, in this little scenario, what are we saying? Whenever we have particular points of interest, essentially what we really want to wait for is, do we get some sort of rejection off that area? And then from that point, can we start to look for our entry models? Or do we get a sweep below that potential area for us to move upwards? So starting off from this little zone right here, what do we actually have? We have our first example. So as price is starting to push upwards, we can identify that, yes, we've created a new high. So what was the most recent low? It would have been counted as this area over here. We then start to look even further. This you could even consider to be our next point of interest. Again, you can start to consider this one as well. And this continues on and on and on. What we then wait for is something like this. Now, one little note I must add is this, and it's very simple. If you are in a very trending condition, don't expect for price to give you the biggest pullback. The main reason is because fundamentals are very aligned to push in a certain direction. You're most likely not going to get that a desired pullback that you really want. So we are going to have to refer to the closer points of interest. And this is really where a lot of you are starting to go wrong. So just looking at this little case study over here, essentially we've got this point of interest. What makes it valid? Let's actually look at the little rules over there. So what makes a point of interest valid is exactly this. Did it create a break of structure afterwards? And did it create an imbalance as well? So these are the two main rules that you're going to have to look at. Is this point of interest very valid? For me personally, I would say yes. Why is that? Because first of all, we can identify that it created a fair value gap straight after the point of interest. Another thing as well is it actually created a break of structure above this piece of price action over here. So this last order block that we got is personally for me very, very valid. And from that point onwards, we will then just wait for it. As we continue on with the candles, this is obviously looking at the higher time frame for this entire thing, exactly there. So as soon as I've got this candle over here, pretty much what I'm going to be waiting for is, okay, cool. I know we've now entered our point of interest. I know that now I'm simply just going to be waiting for either one of the two rules. We might reject off the point of interest straight away, or potentially we might have some sort of liquidity sweep. If I don't get either of the two types, then obviously I'm looking at some sort of change of character. In this scenario, what we actually got was a clear sweep below the lows over here. Price then gave us that rejection candle, and the next candle gave us the engulfing to the upside. So that is essentially the 3-pin bar move that you want to see. We're not always going to get this 3 candle sort of movement that creates that kind of U shape every single time. But when we do get it, it is very, very effective. From this point onwards, we can then expect for us to get into our entries. Now, this video is not dedicated towards the entries, but if you are interested in that, click one of the videos straight after this one over here. I'm going to be showing you my exact A+ setup and into how to actually take advantage into all of this. Now, from this point onwards, we have a very clear idea. We are only going to be looking for buys. Up until where? It's going to be very simple. All the way up until the continuation. So all the way up into the break of structure. As we continue onwards, as you can see, price eventually respects it and continues upwards. So we refer to the next point of interest. If we are clear that our trend is going to continue to the upside, we have already had one scenario where we have seen this happen. So we're just going to do the same thing again and again. So this area over here held up quite nicely. Now we move on to the next. If we are deciding to continue with a continuation trade in the direction, all I'm going to be waiting for is the next valid area. For me personally, what I would generally look at over here, this candle over here looks pretty valid in terms of the movement that it's had. So I guess it's kind of like a breaker block area slash merging it into this main area. I'm going to be honest, for me personally, and you might find this a bit confusing at times, is I am not too specific with the supply or demand zones. The main reason for that is because in the amount of testing that I've done and all that kind of stuff, these points of interest don't hold up all the time. It's more about the interactions around these areas, and then we could potentially look for our reactions over here. Again, continuing to the upside as well. What price eventually did, it ever so slightly came into this area, so not entirely, and then it decided to move on even further. And there we go. Price eventually sweeps into it. So here what we've actually got is we've got a direct move into the point of interest, and then eventually what? An engulfing candle upwards. When that engulfing candle closes on the higher time frame, we can basically be sure that price is going to continue upwards. As we continue with further price action, as you can see, price continues on even further, another level, another break of structure. So that is the second time that the same thing has been reflected. So we have got, in the first scenario, we have got a very, very clear type 2 rejection. And then over here, we have clearly got a very easy type 1 rejection, where simply speaking, all this did was it swept the liquidity over here. And then all this did over here is it went straight into the point of interest. So that is very, very simple. Moving forwards, what can we actually identify? Well, we've got a breaker structure over here. We have then got a nice little order block zone down here that has been pretty much respected. We've created the fair value gap after. So this is generally the zone that I'm going to be waiting on. One little key thing I want you to know is, again, don't be too over specific when it comes to your points of interest. There's just no need for it, in my opinion. Again, it's all about the rejections from these areas. As we decide to move on further, price eventually will hopefully give us that little pullback. Let's just see. Okay, so as we're starting to move closer to this area, okay, cool. So we've now rejected. We're starting to get some rejection, but it seems like we're not getting that strong engulfing candle straight away. So in my opinion already, what I'm seeing is, Okay, cool. We might be hanging around here a bit further than usual. Okay, and there we go. As price decides to break down even further, it doesn't respect it, but what it does instead is it seems like it's rejecting straight off with the wicks. So we want the body closure to be above the area. Has that been respected? Yes. We've got body closure above. It's nowhere near down below this piece of price action. So let's just see if we get further moving nuts. There we go. So that 1 hour engulfing candle afterwards is that confirmation that yes, we are rejecting from this area. We can start to look for our entry models. So to be honest, this video is going to be the step one of you identifying, are you going to get into a trade? This is why I'm giving a very detailed breakdown into all of this. So what rejection type is this? Well, it's going to be very simple. It's going to be the type 2 because we actually started to get the wick rejections. Type 2 rejections. Nice. So we can then start to look for buys over there. Again, a whole video has been dedicated just to my entry models and setups. And by the way, just to give you a little reminder, if you do ever want to download my free PDF down below, it's a full strategy from start to finish, the exact details for step by step that I actually go through. So feel free to click anywhere down below and you can actually get access to that completely for free. It actually comes with a whole 7-day free course as well. Obviously that might change in the future, but be quick to grab that right now. And as you can see, price, what does it do? Pulls back a little bit. And then eventually, there we go. So without even looking at price action and the way it's actually formed, this thing happens over and over and over again. Now, does this go on forever? No. The simple answer is it does not continue on forever. So what you are going to be aiming to do is exactly this. For as long as the trend is strong and for as long as technical analysis is showing you that you are continuing to make higher highs, higher lows, higher highs, higher lows, you're going to continue in that direction. But what happens eventually where price gives you that change of character and then you have to change up your bias completely? That's exactly what we're going to be looking at over here as well. So trends cannot continue on forever. Eventually, you're going to get some sort of pullback and the pullback will be substantial enough where you can consider a change of character completely. So where we were looking for price action over here, as you can see, this over here created our new high. I then decided, so we would have then decided to look at our most recent point of interest. So that would have been at this zone over here. As you can see, some nice rejections, price continued upwards. Okay, cool. We would then look, so if that hasn't created the breaker structure upwards. So if I'm seeing that price is moving a bit slow, I'll then start to look at the interactions. At this point over here, we still got liquidity sweep. So for me personally, this is starting to look like a type 2 rejection. However, when you look at the candles afterwards, it doesn't give you that engulfing candle up. That 3-pin bar that we like to look for, it doesn't give you that analysis over there. So in my head, I'm going to be thinking, all right, cool. Let's wait for a bit more. There might be a bit more consolidation. And that's exactly what has happened. When can we confirm the exact change of character? It's a very simple answer. As soon as we see this low over here being broken with these engulfing candles. At that point right here, that is no longer a rejection candle. That is going to be a change of character. From this point onwards, I am only going to be waiting on sells. So it might be a area, for example, over here. Potentially, it may be a bit deeper, maybe somewhere even up here as well. Regardless, we are only going to be looking for sells. How long is this going to continue on for? Again, many other points actually come into this where you need to understand that. But generally speaking, as soon as you see that change of character on the higher time frame, you've got clear engulfing candles that break further down. That's finally when we're going to be seeing a reversal in our trades. And so that's it. Really the two candles that you need to look at, whether it's type 1 or 2, into how to break down these areas. I'm going to be very honest. Everything we've looked at is only step 1 of building that proper trading plan. So if you do want to see more, I've got a completely free PDF guide down below. Feel free to download that. Again, use any of the other links in the description as well. And feel free to actually watch one of these videos over here. If you click this one over here, it's the exact A+ model that I use. And it's a simple 1 to 3 strategy. So yeah, I'll see you all in the next videos. Take care, guys.